Hey, welcome back to the channel. Today we're diving into OpenDoor Technologies, Open, a company that has not only been making headlines but also catching the attention of major institutional players, retail traders across the globe, and even big-name influencers. If you've been part of this channel for a while, you know we've been following OpenDoor for quite some time. And if you're new here, welcome to the Open Army. This community of investors, traders, and believers in disruptive innovation is growing by the day. If you find value in this breakdown, don't forget to smash that like button, subscribe for more deep dives, and leave a comment with your own predictions, because your engagement helps fuel this channel and keeps the discussion alive. Disclaimer: this video is for educational and entertainment purposes only. I am not a financial advisor, and nothing in this content should be considered financial, investment, or trading advice. The stock market involves risk, and you can lose money. Always do your own research and consult with a licensed financial professional before making any investment decisions. Past performance is not a guarantee of future results. Invest wisely and never risk more than you can afford to lose. Now, one of the biggest catalysts that brought renewed attention to OpenDoor is its feature in Forbes magazine. Being featured in Forbes is not just a vanity headline. It's a clear sign that major media outlets and financial institutions are taking this company very seriously. The tone of the article was bullish, and the reason is simple. OpenDoor is finally closing the gap between perception and reality. It's not just a small-cap, speculative stock anymore. It's becoming a serious contender in real estate technology, and that's why institutional investors are starting to take positions. The Forbes article highlighted a very important concept: the valuation gap between OpenDoor and its peers, particularly Zillow. According to their analysis, OpenDoor has a trajectory that could take it to $9 to $10 per share in the near term. But here's the catch: that projection is conservative. To me, and to many of us who have been studying this company closely, those numbers don't reflect the true potential. With the right catalysts, OpenDoor could easily hit those levels in a matter of weeks, not months or years. And if momentum continues building, it could surpass that range altogether. Why the bullish case makes sense. So, let's break down why OpenDoor could actually make this kind of move. First, the housing market itself is showing signs of stabilization. After years of rising interest rates and affordability challenges, the Federal Reserve is signaling that rate cuts are on the horizon. Lower interest rates mean more affordable mortgages, more home sales, and more activity in the market, exactly the environment in which OpenDoor thrives. When buyers and sellers feel more confident, platforms like OpenDoor become essential because they streamline the entire transaction process. Second, there are policy tailwinds helping the real estate sector. The Genius Bill Act and other proposed policies include tax exemptions that encourage homeowners to sell or upgrade without facing heavy upfront costs. For a company like OpenDoor, which simplifies buying and selling through its technology, this is the perfect environment. It means more inventory, more transactions, and more revenue. Third, OpenDoor is starting to show better gross margins. Traditionally, real estate transactions are burdened by realtor commissions, typically around 5%. But OpenDoor bypasses the middleman. Every time a home is sold through its platform, that extra margin stays with the company. Over time, this margin advantage compounds, and when paired with technology-driven efficiencies, it creates a long-term financial moat. Fourth, the technology platform itself is improving. OpenDoor is not just a real estate flipper. It's an AI-powered marketplace that uses advanced algorithms, data analytics, and user-friendly software to streamline the home buying and selling process. This is the future of real estate. Think about how Amazon transformed retail, or how Uber changed transportation. OpenDoor is doing the same thing for housing, and that's why investors are excited. Finally, the ecosystem is expanding. Partnerships with companies like Zillow and Realtor.com are creating a network effect. OpenDoor is no longer just a standalone app. It's becoming integrated into the broader real estate ecosystem. The more partnerships it forms, the more users it captures, and the more transactions it facilitates. That's a powerful growth engine. Institutional buying power. One of the clearest signals that something big is happening is the recent wave of institutional buying. A perfect example is Group 1 Trading, a massive $45 billion fund which disclosed in its most recent 13F filing that it now holds 1.5 million shares of OpenDoor. That's not a small position. That's conviction. They've gone from observing to actively loading up. And they're not alone. We've seen Goldman Sachs and other major financial players start increasing their exposure as well. This kind of accumulation is significant because institutional investors don't gamble. They allocate capital strategically, and when they see improving fundamentals, strong momentum, and a favorable risk-to-reward profile, they act decisively. What makes this even more bullish is that this institutional buying is happening before the retail frenzy has fully kicked in. We're already seeing global retail investors jump in. People from Europe, Asia, and beyond are opening brokerage accounts specifically to buy OpenDoor. That means we could be looking at a perfect storm of institutional and retail demand colliding. When that happens, prices can move dramatically in a short period of time. 6 reasons the bulls are excited. Let's summarize 6 reasons why the bull case for OpenDoor is stronger than ever. New CEO announcement soon. Leadership transitions often bring fresh strategies, renewed investor confidence, and new growth narratives. U.S. interest rate cuts imminent. Lower borrowing costs will reignite real estate activity. Price now above $5. Many institutional investors are restricted from buying stocks under $5. Now that OpenDoor is above this threshold, new buyers are entering. Strong retail following. The Open Army is loud, global, and persistent. Retail enthusiasm creates momentum. Improving financials. OpenDoor is outperforming revenue expectations and demonstrating that its business model works. Possible AI play. In a market obsessed with AI, OpenDoor can be framed as a tech-driven, AI-powered company, which attracts additional speculative interest. Now let's dig deeper into the financials. Jason Post recently pointed out that OpenDoor is already $22 million ahead of revenue guidance quarter to date. They expected to be at $612 million by this point, but they're sitting at $634 million. With 24 days left in the quarter, they only need to generate $203 million to hit their $837 million target. Based on current trends, they're on pace not just to meet guidance, but to exceed it. This is a huge shift from the past, when critics argued that OpenDoor's model was unsustainable. Now the numbers are proving otherwise. Selling more than 80 homes per day is not just impressive, it's a clear demonstration of scalability. And when scalability meets efficiency, you get margin expansion and market dominance. Retail energy and influencer impact. On the retail side, things are heating up. Influencers like Anthony Pompliano have openly bought shares of OpenDoor. Pompliano isn't just another investor. He's a voice with a massive following. When he makes a move, his audience pays attention, and that creates ripple effects in the market. This kind of retail-driven buying pressure is often underestimated by traditional analysts, but in today's digital age, it matters a lot. We're also seeing international retail interest. Investors from Europe, for example, are opening accounts on platforms like Revolut just to buy OpenDoor stock. That means this isn't just a U.S. retail movement, it's global. And global retail enthusiasm can push a stock into trending territory, making it one of the most watched names in the market. Valuation and peer comparison. Now let's zoom out and look at the valuation. OpenDoor generates around $13 billion in revenue and has a market cap of only $3.6 billion. That gives it a revenue to market cap multiple of about 0.27x. Nvidia, $110 billion in revenue with a massive market cap. Tesla, $100 billion in revenue with a market cap north of $800 billion. Palantir, $3.75 billion revenue with a market cap close to $60 billion. When you line these up, it becomes obvious. OpenDoor is undervalued. If it were valued at even a fraction of what these companies trade at, the upside potential would be massive. This is why some analysts are calling for 10x, 20x, even 100x scenarios. And while those may sound extreme, they're not impossible if OpenDoor executes and continues scaling. OpenDoor was once a $40 stock in 2021. Since then, it dropped heavily, but recent signals are pointing to a reversal. The MACD indicator is showing bullish divergence, and the alpha trend system is flashing buy signals. On the weekly chart, vertical histograms are rising, which suggests that momentum is shifting in favor of the bulls. I believe the near-term price target is in the 10 to 12 range, after which we may see some consolidation back into single digits before establishing new support. Once that base is built, we could see a new leg higher. August gave us clear buy signals, especially around the 2-3 levels. Anyone who bought at those levels is sitting on huge gains already. The squeeze momentum indicator is showing strength, suggesting that a short squeeze could be brewing. Remember, Citron Research has taken a short position, and if the stock keeps climbing, they and other shorts may be forced to cover. That would create even more upward pressure. $5 is strong support now that we've broken above it. Resistance is around 7.9, but once that's breached, $12 is the next logical target. Long-term vision. Looking longer term, I see several possible scenarios. By end of 2025, I believe OpenDoor could reasonably trade between $80 to $100. Beyond 2026, triple digits are absolutely in play, especially if OpenDoor becomes the dominant platform for real estate transactions. In a blue sky scenario, if OpenDoor captures the kind of multiples we see in companies like Tesla or Palantir, the stock could reach $200 to $400 over the next decade. It may sound bold, but remember, people once doubted Tesla at $10, Amazon at $100, or Nvidia before its AI breakout. The companies that change industries often look undervalued right before they explode. So, here's the bottom line. OpenDoor is at a turning point. Institutional investors are buying, retail armies around the world are buying, revenue is beating expectations, technicals are flashing bullish signals, and macroeconomic trends are shifting in its favor. The question isn't whether OpenDoor has potential, it's how quickly that potential will be realized. Will it hit $9 to $10 in a matter of days? Will it consolidate first and then blast higher? Or will we see an unexpected catalyst like a CEO announcement or a Fed rate cut that pushes it far faster than anyone expects? Now I want to hear from you. What's your price prediction for the end of this week? Are you buying more, holding, or waiting for confirmation before making your next move? Drop your thoughts in the comments below. I read every single one.